If we see a push towards a Green Deal where silver and solar power in general is now taking center stage at a period of time when we're already running 200 million ounces of deficit per year in an asset that is depleted, where Keith tells us it's 8-1 coming out of the ground, but right now it's priced 80-1. Elijah, I would tell you there are very few investments on the planet that have that kind of backdrop.
Hey everyone, we're going to be attempting something that's never been done before. Elijah K. Johnson here with Miles Franklin. All of these reporters are coming on one call together, and the script is being flipped. Instead of being the interviewers, they're being the interviewees. Premiering Wednesday, November 18th at 9 p.m. Eastern. So make sure you don't miss this special episode of Mugs and Metals, where we just all get together, drink some beer, and have a chat about the metals markets. Make sure to be there. And where is it going to be posted? That's the most important thing. Where do you go? Well, it's going to be on all of these YouTube channels. Yeah, all of these YouTube channels. So make sure to catch it at 9 p.m. Eastern, November 18th. God bless. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today, our president, Andy Schectman. Andy, thank you so much for joining us today.
Always good to be back, Elijah. Thanks for doing this every week. It's getting to be a lot of fun.
Definitely. So we've seen a lot of news agencies declare that Biden is going to be the next president. If this comes to pass, what do you think? How do you think this will impact the silver market? Because he's talked a lot about green energy and all of that, and people are thinking that this will be bullish for silver.
Well, it will be if they take the contested Senate race in Georgia. Short of that, if the Republicans hold the Senate, I think he'll have a hard time rolling back the Trump restrictions on the environment. I think he'll have a hard time rolling back or rolling out his green agenda if there is a deadlocked Senate. If they win the Senate and Kamala Harris is the swing vote, his agendas will pass. And then you'll see the $50 silver that Goldman or Citi is calling for. Look, right now it takes roughly 20% of all the silver mined each year. We mine roughly about 800 million ounces a year. 160 million ounces or more go to solar right now. This year, California passed a law saying that all new construction has to have solar in it. And if Biden and his administration does somehow take Georgia and has the control of both the House and the Senate, then you will see these things happen. You will see silver really take off as the industrial uses and applications will grow exponentially. We're running right now, Elijah, a deficit every year. The world consumes roughly 1 billion ounces of silver per year, and we mine 800 million. There already is a 200 million ounce deficit. And one of the things that Keith Neumeyer talked about in our interview that I find to be really important for people to understand as it pertains to this is, people keep talking about the gold to silver ratio, and that's relevant, right? 72 or 78-1 rather, that's relevant. But what Keith brought up, which to me is even more relevant, especially as it would pertain to a House and Senate sweep by the Democrats and these agendas going through, would be the mining ratio. Remember, Keith said that what's coming out of the ground is 8-1. And we asked him, Keith, how long can silver be priced at nearly 80-1 when it's coming out of the ground at 8-1? And obviously the answer is it can't for very long. It has to regress to that natural mean. Otherwise, it becomes uneconomical very, very quickly. So let's just encapsulate all that. If indeed Biden and his administration were to take the Senate and have a sweep of the House, the Senate, and the presidency, so he could enact his agenda and roll back Trump restrictions. I think when you look at a 200 million ounce shortfall already, when you realize that 20% of all silver mining goes to solar power already, if you accentuate that, and he is able then to get his agenda passed for a Green New Deal, I think you're looking at massively higher prices of silver based upon the mining ratio, based upon the fact that there will be far more industrial applications. And here's the thing, one begets the other. See, silver is called inelastic, meaning you need it no matter what the cost for your utility. This phone right here has maybe, I don't know, 100th of an ounce of silver, whatever it is, as does the computer I'm looking at you on, as does the lights behind me. Everything that conducts electricity, just about everything anyway, has a modicum of silver in it. All the way down to the simple light switch up to the biggest conductor of electricity, like a battery-powered electric vehicle. Silver is necessity in industry. And if we see a push towards a Green Deal where silver and solar power in general is now taking center stage at a period of time when we're already running 200 million ounces of deficit per year in an asset that is depleted, where Keith tells us it's 8-1 coming out of the ground, but right now it's priced 80-1. Elijah, I would tell you there are very few investments on the planet that have that kind of backdrop. And for people not to be realizing this right now is shocking to me. But then again, are they? Chris Marcus, our friend over at Arcadia, just posted something with Andrew McGuire, who's saying that Standard Chartered Bank is hitting all the ask prices, doesn't matter the premium. They're buying up as much silver as they can. They're cornering the market. Last week, he told us that for the first time in his 40-year career, the Chinese are buying all the silver out of the Swiss refineries, diminishing what is available for the big wholesalers in the UK, like Andrew is. So we're beginning to see, I think, a push towards massive silver accumulation, and maybe, just maybe, the insiders realize that this is ultimately a foregone conclusion. If not now, then soon we are moving towards a greener agenda, like it or not. So I think in general, Elijah, this is very bullish for silver, whether it happened immediately or not. The big money is moving in that direction right now behind the scenes.
Definitely. And I asked viewers to submit questions, and one of the questions follows great from your answer here, because they point out that platinum and rhodium have really, or palladium and rhodium have really kind of risen so much, in comparison to gold and silver. They've kind of decoupled from those other markets. Do you see a similar thing happening with silver? If we see all this greater industrial demand, do you see it kind of decoupling from gold's price?
It has to. And again, that goes back to the question we asked Keith. And in fact, I asked him that specifically. I said, do you think we see it revert to that mean? And again, I mean, just in any asset, if it costs you a certain amount that reflects a 78-1 ratio between it and gold, you're asking, will it decouple for gold? Well, if it takes 78 ounces of silver to buy an ounce of gold, but in order to produce it, you have to expend more energy. You have to look further, dig farther. You have to understand something. Gold mines, now don't take this the wrong way, but gold mines in comparison to silver are a dime a dozen. There are very, very, very few dedicated silver mines on the planet. And silver, as we've talked about before, is found in nature in a fashion called epithermal, found very, very close to the surface. So even without the sophisticated machinery that is used in mining today, the big deposits were found eons ago, decades ago. And so there are very few dedicated silver mines. The majority of the silver that we see coming to market right now, 70% of that 800 million ounces that we mine each year, over 500 million ounces, almost 600, comes from byproduct mining of other metal. So I would argue, yes, it has to. It has to very quickly. Or all of a sudden the people that mine it go out of business. It just doesn't make sense that you can trade 78 ounces of silver for an ounce of gold, but in reality, Mother Nature is saying, well, that's off by a factor of 10 because we're pulling out 8 ounces of gold for every silver, for every 1 ounce of gold that we are. So it has to revert to the mean. Platinum has been frustrating. Palladium, I think, is what the listener is talking about, which has really defied logic and gravity and really taken off. And here again, you could argue that's a price anomaly in terms of its relationship to platinum. Elijah, when I look back over time, I'll tell you that the single biggest factor to some of the greatest success I've ever had is identifying and exploiting price anomalies. Platinum and silver are the two biggest price anomalies I've seen in my career. The difference is that I think silver has far more reaching industrial applications. Platinum is primarily used in catalytics. It used to be that platinum was the primary catalytic for unleaded fuel, but here again, back somewhere around 2000 or right in that range, platinum got too expensive. So they retrofitted, the auto manufacturers did, their assembly lines to take palladium instead of platinum. And then through the time, palladium went off to the races. If you told me we would see a re-retrofit moving into back to platinum for catalytics for unleaded fuel instead of just for diesel fuel, we all know what happened with Dieselgate and the drive to get diesel engines off the road. Well, that's the easy answer as to why platinum hasn't done well. I'm sure there's more to it than meets the eye, but the bottom line is whether you're talking palladium or whether you're talking silver, not only are you talking geologically anomalies, but you're talking price anomalies, and those don't last forever. So I like platinum. I'm not a big fan of palladium. I think it's too expensive in its relation to the other metals. Silver, on the other hand, is to me maybe the buying opportunity of a generation. And I think that it's worthy of noting what Keith is saying. I think the biggest single factor, above all else, Biden's agenda aside, is the fact that it's priced 10 times more nearly than what is coming out of the ground in terms of its relationship to gold. That mining ratio is huge. And I don't think I've ever seen it anything like this. So yeah, that to me would say, if you have strong enough fingertips and can hang on long enough, silver is going to be the play.
Definitely. Now, Paul is wanting to know about platinum, and he's saying, because platinum is so cheap right now compared to gold, what is your perspective on trading gold for platinum?
Well, logically, it makes sense. The difference is, I mentioned this once before, and there was a viewer comment saying that platinum was used for the last few hundred years ago in Russia as a monetary metal. That was news to me. I would simply tell you throughout all of history, gold has a much more robust monetary history. When we look at the reclassification of gold as a tier 1 asset, I think gold is going to be center stage for whatever comes next. Now, I would also argue that I don't think gold would go to the moon without platinum coming along for the ride, at least to a certain extent. I'll tell you that I would say if you did it with a portion of your gold, it would make sense. I would rather see them trade it to silver at a 78-to-1 ratio than to gold. But what he's saying is the exact same argument, mathematically anyway, that I'm making for silver. In my opinion, silver is used more. See, here's the thing about silver that makes this argument so unique is that, as I've said a few times lately on this and other shows, silver is a unique asset in that it's bracketed on both sides. On one side, you got copper. On the other side, you have gold and maybe platinum. Gold and platinum have minimalistic industrial uses. Well, you could say platinum is for catalytics. But, short of that, they're largely monetary investment metals. The copper, on the other hand, is largely industrial. So you have silver in between, which has a very rich history as a monetary metal, maybe even more so than gold as money, but also is very heavily used in industry. So I might backtrack a little bit and say platinum certainly has its industrial uses, but less with the drive towards green, away from combustible engines. And the fact that it's mostly used in diesel engines has radically diminished its industrial uses lately anyway. Not to say it doesn't have it, but the bottom line is silver is used in everything, from water purification to textiles to solar panels to anything that conducts electricity, to on and on and on. Silver has massive uses. And so here's where one begets the other. If the green agenda were enacted and the price of silver started to rise, at what point do all the industrials secure their future production? Like Keith was saying the other day, the treasury at Apple has enough money to buy the silver industry over a few times. If you make phones and iPads and computers that need silver in it, and you have the money to buy future production for generations, at what point do you just say, I need to secure this and stop worrying about it? And at some point, as the industrials start to accumulate for their own necessities, they'll all start to accumulate, which then attracts the investment side, and one begets the other. So silver offers unique opportunity, I think, that you don't find elsewhere. Because short of catalytics, platinum is not massively used in industry, whereas silver has so many uses, plus is viewed as a monetary metal and as money, at least has been for a very long time. in my book anyway, it's money, it's wealth. And so I think silver is more unique than platinum in that respect because of the myriad of industrial uses that it is used for.
Definitely. And before we let you go, just kind of one question from our viewer is he's wanting to know your perspective and I guess price projections for the rest of the year, and kind of if you just want to give us an update on where we've been in the precious metals the past couple weeks and where we're headed towards the end of the year.
Yeah, so, making price projections can often be a fool's errand because this is a very high stakes game. You can tell this is a very high stakes game by what happened on Monday. Now, it's been a common theme in a lot of the stuff I've talked about, Elijah, to talk about metal suppression and metal manipulation. And there have been times where I wondered, is this really the right path to go down? Certainly seeing JP Morgan settle a $920 million fine by the Justice Department and deferred prosecution on RICO charges solidified my belief. They got charged with spoofing charges, which to me was kind of a slap in all of our collective faces, and that what they were doing in my book was a lot more than price spoofing. But let me give you an idea of just how overt this is. And I'd like to ask the world out there, where the heck are the regulators? Because on Monday morning, we saw 212,000 plus silver futures contracts dumped at the open. That's 5,000 ounces apiece. That's over 1.2 billion ounces of silver. That is 1.5 years of global mine supply dumped at the open just to drive it down below its 50-day moving average, which then kicks in the non-emotional algorithmic black box trading programs that run most of the big funds, and then selling begets selling. This is not how markets work. Anyone who wanted to sell 1.2 billion ounces of silver would not dump it in the thinly traded open. They would layer it over several days to maximize the return instead of creating an effect. It was a drive-by shooting to create a perception of reality that went along with, oh, goodness gracious, the Pfizer came out with the vaccine, and now let's dump the markets and goose the equity markets. What it is it just kind of makes me feel like they think we're all naive and stupid. That, oh, great, there's a vaccine, so let's smash the price of gold and silver and goose the equity markets. Everything's going to be great. And it just seems like people have forgotten all about the Pfizer announcement already, as gold and silver are climbing that wall of worry here again today. I think it doesn't matter too much any longer, the noise that we see around us. I think the ball is in motion as it pertains to where gold and silver are going, and I think they're going much higher. And I have beaten a dead horse since the beginning of this year about the reclassification of gold, but it goes deeper than that. I mean, you got the IMF calling for a new Bretton Woods. You got the World Monetary Organization and the cover of Time magazine calling the Great Reset. The World Monetary Organization's meeting in May of 2021 is titled The Great Reset. We are heading down a path, and I don't think they would have reclassified gold if it wasn't going to be part of the next system. So I would simply say this to you. I think bull markets go higher than anyone thinks possible, and this is going to be a heck of a commodity bull market. I think gold and silver will outpace everyone's projections. I think bear markets will fall further than anyone thinks possible. And I think ultimately the equity and the bond markets will echo that. And for my money, there is nowhere better to put your wealth right now than in an asset class that has lived through 2 world wars, German hyperinflation, the Great Depression, and every pandemic this world has ever seen. Where's it going? I don't know. Much higher would be my guess. And I say that to you. I'm not talking my book. I believe it in my soul. And I think that these pullbacks that we saw earlier this week, well, they're a subsidy. Look at what the big money is doing. Look at all the central banks taking possession of their gold away from the Bank of England and the New York Fed. Look at all of the metal that's being pulled off the COMEX by the others. These are the sovereign wealth funds and the family offices, the very wealthy people. They're taking possession, removing counterparty risk, pulling as much off in a month as we see in a year, every single delivery month. What is happening, what we are seeing is the big money, the elite, the people in the know, quietly positioning themselves ahead of the crowd. So where does it go? I don't have a number for you, but I would tell you a lot higher than it is now and a lot higher than people are banking on would be my answer, I guess.
I did want to ask you, because I love getting multiple perspectives on this issue, obviously, about the manipulation. So I've heard the perspective of, obviously, spoofing by itself can be up or down, right? And that it probably only makes a momentary impact on the price, is what I've heard. And then also we saw on Thursday, gold price and the silver price increased significantly. So how can we only look at the decrease in price, but then not also say that it's manipulated to the upside? I guess that would be the question. Is it seems like we see drastic movements to the upside, but also to the downside.
Very rarely do we see those drastic movements to the upside. And when you look at the drastic movements to the downside, they're almost always in thinly traded session. The AM fix, the PM fix, which is in the middle of the night, 2 a.m, you see massive dumping. Or as we are transitioning into New York, it's just not the way that someone who was selling to maximize price rather than create a perception of reality would sell their whatever asset they're selling. I guess it's a fair point. I'll simply say this, that the argument to spoofing is that they're front running the high frequency traders, that they would try to trick the high frequency traders into believing this is the way that it's going, when it actually doesn't. It's illegal and it doesn't matter. And it's just, to me, an answer to kind of misdirect us from the truth. If I had to guess, there's far less, if any, manipulation to the upside, at least right now, as there is to the downside. Doesn't mean it won't change. Doesn't mean that we won't see a concerted effort to push prices much higher at some point. At this point right now, I would say that it's few and far between in relation to what they have done over the past 12 years to the downside.
Awesome. Well, Andy Schectman, thank you so much for sharing your perspectives with us today. And any last thoughts before we let you go?
I think that it doesn't matter, Elijah, how this all plays out with the Senate, with the election, with whoever takes office. And it looks like it'll be Biden. Both administrations seem hell-bent on spending money. No one seems resolved to raising interest rates, or at least letting the free market dictate where those interest rates should be. No one seems ready to make the very difficult choices that will lead us down a very difficult path, but at least would allow us to maybe start a road to recovery. We are headed so far down a rabbit hole that I don't know that there's any way to get back out. And it looks like we're going to head into negative interest rates and all of the craziness that comes along with that. So I think you do what your gut tells you. And I think it's time to hunker down. I think we own precious metals, Elijah, not to make money. That's not the reason. We do it because it's wealth. It's been wealth for 6,000 years. And in times of great uncertainty like we face right now, we are adrift in a sea of completely, totally uncharted waters. I fall back on that historical precedence of wealth. And I think that's why people should be buying gold and silver, not to get wealthy, just because everything is really a jumbled mess right now. And I think mathematically and economically, we have a price to pay. This country will pay a price, I think, for as deeply indebted as we have become at the lowest interest rates in human history. There's only one way that can end, and it's not very good. And I think the governments have told us they have chosen inflation over default. So it's inflate or die at this point. So the biggest question that people should be asking themselves is not how much gold and silver should they own. It's how much exposure do they want to a currency that's north of 100 trillion in debt and has chosen a path of inflation over austerity. That should tell you minimizing your position to U.S. dollars like the big central banks are doing is probably the best path. I do appreciate your desire, Elijah, to show a balanced viewpoint. I welcome that. I welcome listeners to show me a better place to put your money right now than precious metals. I welcome you to find someone who can logically tell us that gold and silver have not been manipulated, or the interest rate market has not been manipulated, or the Forex market. I am more than willing to chat with anyone on this side who would say, hey, let's look at it from the other side. I think the information is too much, screaming too much that, hey, this is happening. So, but yeah, let's look at this from both sides of the equation. I welcome that. I would like someone to change my viewpoint on things. Until then, I believe that the most important thing people can do is slowly and gradually mitigate their exposure to the dollar. And whether that be through farmland, foreign currencies, or precious metals, or a combination of the both, all three, I think that would be a prudent thing to do heading into 2021.
Yeah, definitely. I love getting multiple people's perspectives on it, because at the end of the day, if you hear both sides, the truth speaks for itself, right? So definitely. Well, Andy Schectman, thank you so much for your time. If people would like to give us a call, they can call us at 1-800-822-8080 or email us at info@milesfranklin.com. Andy, once again, thank you so much, and God bless.
God bless, Elijah. Look forward to seeing you next week on Mugs and Metals.
Definitely. Wednesday, 9 p.m. Eastern on this channel.